Let's do it. Welcome to the We Are CC podcast. Thank you, everyone, for joining us for our 20th episode. We've made it. We're all going to make it. I'm Tom Crown. You can follow me on YouTube at Tom Crown. And the man whose favorite music to listen to while trading is Baroque. Ha! Baroque. I'm feeling broke today, man. I'm joined, of course, by the illustrious man who has made the mistake of giving his wife some crypto for her birthday in March to get her interested. Rest in peace, Mr. Poppy. The man actually working as a writer on a new Netflix horror series is called Tales from the Cryptocurrency. And a young man who's trying to get his rap career off the ground under the name of Blockchains. I think that means Oz. Anyway, you can follow our previous episodes on weareccpodcast.buzzsprout.com, and you can join us on the Reddit or on the We Are Cryptocurrency Discord at discord.gg/cryptocurrencyofficial. Today is quite a day, I'll say, and I think we have a lot to talk about. So, Poppy, why don't you take us away?
Sure thing, Tom. Yeah, it's no secret. If you're listening to this, then you know what the charts look like, and boy, do they look rough. There's no spinning that in any other direction. So when I wrote this, the low was at 22,592. I honestly, I don't even know what the price is at. I've been so busy today, so I'm not sure. Hopefully it's recovered a little bit from there. 22K was a level that a lot of analysts were looking at as far as a swing low on the macro. Not to say that it can't go lower, but that is a key level. So everyone's wondering what happened, and I think it's safe to say that this is another round of capitulation that we saw. A few things to note is we are seeing the dollar regain its strength. The euro, so competing currencies, the euro and the Japanese yen are both tanking right now, which lends strength to the dollar. When they go down, the dollar will go up. The Consumer Price Index report last week, that's the report from the U.S. government on the state of inflation, that showed inflation is going up month over month, which is not what we wanted to see. And what that means is that there's a possibility that the rate increases that we're seeing from the U.S. Fed, they may either become more aggressive or there may be more of them. And in any case, that's not a good thing for crypto or stocks. And some other data. So talking about capitulation, the amount of Bitcoin that has moved into exchanges typically associated with selling over the past week has been at a level we generally associate with capitulation. We usually associate with peak bear market. The last time it was at this level was March of 2020, which was the COVID crash. And before that, the last time was December of 2018, which was peak crypto winter for the last cycle. We're also seeing on the momentum, the RSI, we're setting new records on multiple time frames. So this is, if you are feeling stressed, if you're feeling a little bit upset and uncertain, that's okay, because a lot of people are, and you should be. It's a stressful thing. Don't deny it. Embrace it. Realize, this is a little bit scary for people. But, a couple thoughts, and then maybe we move into some discussion on this, guys. One, keep in mind that markets can be irrational longer than you can be solvent. So if you're here loading up in longs, expecting, hey, it's gonna bounce anytime, that's not a guarantee. Just because we are extremely oversold, just because we're at the bottom of a range, it feels like it could bounce. That doesn't mean it is. The macroeconomic climate really feels like it's in control right now. So just trade safely, use stop losses, right? But then also historically, based on a lot of different indicators, many of them, this is a range where you may want to consider slowly consider reaccumulating, averaging into some investment. Because again, you buy when the markets are bloody and then you cash out in the bull run. You don't want to buy when it's already back into the bull market. But with that said, gents, I'm curious to hear what your thoughts are. We haven't really had a chance to talk about this. It was a heck of a morning waking up to this.
It was a heck of a night going to sleep last night, even. Yeah, the last few days, not the best sleep I've gotten in a while.
Yeah, I think I'm lucky that I didn't actually look at it before Look at the market Sunday night. Normally I watch the close, but I was busy. So I guess ignorance was bliss until you wake up and you see just this incredible red candle.
Yeah,
Oz,
we'll
you're
get
the
into that, I'm sure. I was going to say, and I went to sleep and I saw the Celsius news, and to wake up to this was kind of almost expected. Didn't want it to happen, but wasn't a huge curveball with that shocker. I'm sure we'll get into that topic here today, but
yes, we will be talking about Celsius. So I know that there's some folks listening that are curious about that. So we'll definitely hit that. Oz, any thoughts as our low time frame guy? Any thoughts on how you've been trading or not trading the market?
Well, to be honest, I've been very busy recently. I haven't really been keeping up with it, but
lucky.
From a from a low time frame perspective, I haven't really bothered to look. There's not much point getting caught up in the noise down here. It's a lot safer just to stick to the high time frame trend because the low time frame doesn't really matter here. There's a lot going on.
True. Yeah. So let's see. So yeah, actually, you were right, Tom. The next thing we were going to talk about was really how in these kinds of market conditions, some services, some products can risk insolvency. So basically what you're seeing at the end of the day, if you were to simplify this, is you're seeing a lot of traders exit positions. They're selling their Bitcoin, they're selling their Dogecoin. They're just saying, hey, I can't, I'm just too stressed out. I've watched my stuff go down too long. I'm done. I'm selling, cashing out. But the problem you have is that some services can't always absorb that heavy that heavy selling all at once, right? If you've probably seen it, right? On really crazy days of trading, some of these centralized exchanges even will either go offline or they'll pause withdrawals or pause trading, whatever may happen, right? And it's usually associated with liquidity. You need enough liquidity in there, or you run into a case where the system kind of breaks down, and either you can't move stuff or you're paying, way too much to do your trade. So, Tom, I know you've been talking about this ad nauseum, but you, as someone who invests in Celsius, maybe give us a little bit of a breakdown for the folks out there on what's going on with Celsius.
Yeah, I think I'm derailing us back. We should probably say a little bit more about price. I'll just try real quickly. We're kind of, we're at 20, we reached like 22. We are very close to the 200 weekly moving average, which historically has been an opportune time to enter the market. We're not quite there yet. It doesn't mean price can't go lower, but every touch we've seen in history so far, it's turned out to be, in hindsight, a great entry. Definitely doesn't mean go all in or anything, but if you're, if you sold some at a higher level, maybe that's where you start to eye kind of re-entering slowly. Definitely we have supports below us like 20,000. I would say then below that like 13.8, 10,005. I can't really see this market trading lower than that. Those are pretty low already. 10,500 would fit the 85% retracement we've seen in previous cycles. And let's pepper this off with RSI on the weekly and the monthly timeframes are more oversold right now as we touch this 200 moving average, basically, than they've ever been in the history of Bitcoin. That's true on the weekly and monthly. So Bitcoin's very oversold, but that doesn't mean it has to go up right now or anytime soon. Just be careful out there. Move slowly. I know people are even sweating it's not just crypto, it's stocks. It's everything except for the dollar at the moment. If you have a 401k or a Roth, it's really tempting to pull that money now and stop contributing. But if you're a millennial, this may not be today, but this year is very likely to present opportunities for transfer of wealth that we've never seen as adults. Stocks are already, the NASDAQ's down 32%. That's greater than the March crash in 2020. If you can cover your cost of living and your bills and everything, keep those DCAs in your retirement funds. It's nothing to do with crypto. This is just overall. Okay, got that out. So Celsius, I don't like the mechanics behind it are not my privy. The SF to F whole debacle going on with that, I know has some kind of impact on it that's causing maybe more liquidations or something like that. Maybe one of you guys knows a little more. But with Celsius right now, we got that email last night at 10:30, and that is the email you don't want to see. Typically, when an exchange pauses withdraws in crypto history, that's a very bad sign. Not something that's done lightly. Celsius did say their number one priority is to protect consumer funds. I do believe that. I don't think that that's BS. I'm not positive if they're able to completely, but I'm sure that is their attempt. My advice, I'm someone who has coins on Celsius. I have a few $1,000s. It's not a great position. I don't know if I'm going to get them back. But what I do know for everyone out there, there is an action that you should take. And that is you should log on to your Celsius right now. You can't withdraw, but make sure that you have your whitelisted addresses for all of your assets. Make sure you have those in already. If you don't, put them in, because there's a 24-hour wait period. So let's say theoretically Celsius, tomorrow is like, all right, we're unpausing withdrawals. If you don't have that whitelisted address, you're going to put it in. Then you're going to have to wait another 24 hours. You want to grab those assets out of there as fast as you can if they reopen withdrawals. That's my opinion. I'm also withdrawing from my other kind of yield platforms. Not that I'm necessarily think they're going to follow the same fate, but for me, it's like I entered these platforms because the risk to reward was there. The risk I viewed as very low, and the reward was pretty good. Since I started using those maybe a year and a half ago, we've seen those APYs slowly bleed down. The reward is getting smaller. And now with this Celsius situation, the risk is higher in my mind. So not necessarily that BlockFi or Nexo or whatever is going to suffer the same fate, or even Coinbase or Binance or something. But the risk of not having custody of your coins is shining here. It's been a few years since we've seen anything like this, and we all got a little too comfortable. And so it's time to put our coins back in our wallets, keep them in our custody.
Thanks, Tom. That is good advice. A comment I put on Twitter, I saw someone say that same thing, and I agree. If you have the ability to be your own custodian of your coins, however, just the nature of the kind of the world we live in, right? Some people are pushed farther out into that risk spectrum because some people can't afford to just hodl Bitcoin for 10 years, right? Some people need a little bit of passive investment or a little bit extra money to get by day to day, especially with stuff like gas up so much. And if you're that kind of person that's just like, hey, if I get my Bitcoin back from Celsius, I want to lock it up somewhere else, just do your research. Since this news broke on Celsius, their competitors have come out to say, for the most part, hey, this isn't an issue for us. We're doing okay. Things are healthy, just to reassure their own investors, but also maybe an opportunity. It's not to say just because one, is potentially failing that all of them will. But like Tom said, I think it's really just safer to keep your own coins, in your own wallet. So let's see,
especially until this blows over.
Yeah. Well, definitely at this point in the market cycle, when even whales may be, considering capitulation, right? That does happen each cycle. You just get to that point where even the most committed start to have doubts about things and cash out. But I can tell you by looking at the data, the market is still in a net accumulation. Despite all of the Bitcoin that's getting sold onto the market, it's all getting scooped up on, daily, weekly timeframes. And we've been in a net decline for, I don't know, the past year probably. So it's not the end of the world, but there's some short-term pain here for sure. Another one people are watching is Tron. So I know we talked about this last episode, and Tron, basically with the Luna UST model, except it's Tron with USDD. Now, not surprisingly, a ton of shorts had opened up on Tron, expecting it to follow the same path as Luna. Justin Sun, the leader of Tron, has deployed a few $1 billion to combat that and strengthen their positions. So I think some advice there would be to be careful. I mean, Tron may go down over time. USDD potential to lose its peg, right? It's another algo stablecoin, not guaranteed. But also in the short term, I wouldn't be surprised. Justin Sun has a lot of money. He has access to a lot of funds. He could definitely do at least one good short squeeze. So if you're in a short position, be careful with that.
I saw something about him offering like a really absurd APY or something on shorting Tron. I don't know if that's related. I read that kind of right before this started.
I don't know if I've seen that. I thought
like a high IQ play.
I don't know. I just know Justin Sun is one of the best connected people in crypto. So I'm not one to generally bet against those kind of guys. Now, Do Kwon, obviously he had connections, but I wouldn't put him in the same league as Justin Sun in that
not
regard.
Even close.
Yeah.
Justin has a lot more strings to pull.
What's that, Oz?
He has a lot of strings to pull.
Oh, he does. He does. Yeah. I wish I was part of that inner circle. Justin Sun, if you want any new friends, hit up Poppy, man. So this actually, before we leave that, I know Mr. You had some connection issues, being a little bit quiet. I wanted to hit you up because we just kind of stepped through some of this DeFi and investing into stables. Is there anything you wanted to add to any of that? Maybe may still have that connection issue.
I hear.
Yeah, I can hear him. Yeah.
Check.
Oh wait, Mister, you probably need to be brought back into Reddit.
Oh, he's muted on Reddit.
Yeah, there we go. You're muted on Reddit, sir. I cannot.
Okay,
I cannot,
how is that?
Oh, there we go. Beautiful.
Good. Okay, sorry about that. Yeah, when my Wi-Fi dropped, it must have reset my mute. But yeah, I think this is just a classic case of kind of the weaknesses in operating models that bear markets tend to expose within, different projects, different kind of companies, different entities, what have you, right? And with respect to Celsius, it's really a tough spot, right? Because I definitely agree with Tom as far as the being in kind of a risk off mood, and that the risk reward analysis doesn't really return the same result anymore, right? The risk is much higher, the reward is much lower. Maybe there's not as much need to go back in. For me, I think what this kind of points out is what the value of pure DeFi brings to the table, right? Because um, specifically with the freeze on withdrawals, having a non-custodial, having a permissionless and super accessible DeFi platform could prevent something like this, right? While it can't prevent a bank run and maybe a collapse of a algo stablecoin, for example, it can prevent the inability to withdraw your funds. And I think that kind of just speaks to the core difference between true DeFi and what folks like Celsius and maybe even Gemini to some extent have been saying, trying to position themselves as DeFi writ large. I think really looking at Celsius's message of them trying to play in the DeFi space and calling themselves DeFi, it really doesn't hold water anymore, right? Because when you can do something like halt the blockchain, that's not decentralized. When you can prevent someone from withdrawing funds off of withdrawing their own funds that they've deposited, that's definitely not decentralized, right? So for me, it's just really shining a light on making sure that regardless of how trusted an entity might be viewed, it's always super important to have control of your keys. It's always super important to make sure that it is decentralized, that no single actor can get between you and your funds. And at the end of the day, that's what we're doing, right? It's that sovereignty on your wealth, the sovereignty on your own finances, and that includes the ability to withdraw. Because what good is having control of your money if you can't put it back in your pocket, right? So Yeah, for me, I'm not sure where Celsius is going to go. I think there is a bit of risk there, and I do echo Tom's sentiment on that one. As far as as soon as they open withdrawals back up, make sure you get your funds off of there and put them on your own wallet in cold storage, what have you. But I don't think it's necessarily guaranteed failure or anything like that. It is a
I
tough
agree.
spot to be in, right? And if they can solve their liquidity issues, they'll be okay. It's just going to be, a new reality where the APRs are different and the reward structures are different. Um, but yeah, I chalk this all up to really tough lessons, just ecosystem wide.
Good advice. Good advice.
Mister, do you know what? I also heard this, and so I don't want to spread rumors, but I'm just sharing kind of the things I've read that Celsius might have had some of their funds in DeFi platforms collecting interest, and that those yields dumping along with the asset value could have contributed to this. Have you heard anything about that?
Yes, and actually that's a narrative that goes back years at this point, right? And I don't have an answer for you, man. Like, anything I say will also be speculation. But just to kind of throw some more fuel on that, I guess, rumor fire, right, is there have been a lot of suspected entities that had ties to Celsius back in the day, and they were big players in DeFi and certainly made a killing, right? But you know they seem to have largely exited. The suspected Celsius entities seem to have exited DeFi in recent months, if
Mhm.
not recent past year. But that's not to say that they're not still in the game, right? But that just raises all kinds of questions, man. Like, what are they doing with those funds? Why are they in the unregulated spaces? But also, more importantly, with what funds are they playing with, right? Are they playing with user funds, like deposit funds, and trying to get a little bit of extra leverage and get a little bit of extra juice out of those funds? Because in that case, oh man, that would explain why they're insolvent right now, right? If you're playing with deposits that you need to keep one-to-one on redemptions, and all of a sudden the deposits that you're playing with go sideways, right? The money that you put into some of these protocols is going sideways, and you can't get your initial deposit back. Uh, that would explain, right, why they can't support redemptions right now. But that's all speculation, and I'm not saying that that's what it is. But if this whole theory and these hypotheses play out that way, then it would kind of make sense. But sorry,
Well,
man, I don't have an answer for you.
I did see some news. This is on Twitter, so take everything with a grain of salt. When you're looking at Celsius wallets, just like any protocol, these on-chain analysts, sometimes they make assumptions on which wallets belong to certain projects or protocols, right? But I did see quite a few posts talking about how today Celsius Network had moved 17,919 wrapped Bitcoins into Maker to take a loan out. They took a loan out for $278 million, which makes that one the largest debt position on MakerDAI. And they've just been topping it up ever since then. The liquidation price, at least as of 7 hours ago, is around $20,200.
Oh, good.
It's
So
18.
they're moving down the lick price. That's really smart, actually. And if that's what you were talking about, Tom, then yeah, actually, that is definitely am aware of the loan that they're taking out to try to solve their liquidity problems. Um, but again, that comes with risk too, right? If Celsius gets liquidated, before Celsius gets liquidated, if they're, the last I heard, their liquidation point was somewhere around like 21, 22. If they're pushing it down to 18, great. I
I
think
believe.
that's smart. Yeah, but not confirmed. I think I'm just going off of your guys' information right now. But before that liquidation point comes Michael Saylor's liquidation point. So keep that in mind too, right? If Saylor gets liquidated, that's a cascade that's going to eventually touch Celsius most likely, and that's a risk point right there.
Yeah. Although to clarify, Michael Saylor has gone on record to say he has options. He can top up his collateral all the way down to like 4K, I believe. And then he supposedly has options then, but at 4K, I feel like he's he's probably going to be low on options, and it may be pretty scary for basically everyone at that point.
Yeah, you'd expect someone like Sailor to be defending his margin, right? And I think
Mm-hmm.
that's smart. It's just a question of like now you have Celsius out there with their billions in a leverage position. If they can't move their lick price, if they can't defend their margin successfully, then and at that point, if they get liquidated, then the cascade, rests on Sailor's shoulders, and he's just going to have to defend his margin against the volume that Celsius is now going to be generating. And I think that's going to be a tough spot for everybody.
True.
Not to be the doomsayer. I'm not saying this is these are just risk points, right?
In that same respect, though, that is a lot of big money that has interest in defending a price point. They're all different, but I think that's like a silver lining we should acknowledge is there's
Great
some
point.
big players who do not want to see those prices go down there, and they're going to do what they can. They don't want to lose money, just like we don't want to lose money.
And that's the great thing about this what we call this open market, right? Is it really is that free market, and free market dynamics are going to come into play, because not only do you have the big boys that don't want to see the price retrace too hard, but you also have some pretty big boys that do want to see the price retraced, right? So it's an interesting battle between kind of sentiment, right? You have the bear camp and you have the bull camp, and this is what we're seeing. We're seeing the war play out right in front of us, and I think that's what's so great about these open markets, right? Regardless of price action, unfortunately, sometimes it doesn't go the bull way, right? And I think most of the folks on this call are bulls, right? So it's not always going to go our way, guys, but it's always cyclical, and it's always going to come back, and it's proven to always come back from the depths, right? I mean, COVID, right? I mean, wow, that flash crash during COVID was something else, but look at how we recovered, and for 2 years really showing good signs of strength, and now we're finally at a point where maybe we shouldn't have unexpected this wasn't so unexpected. We shouldn't have been, we shouldn't be so surprised that we're back in this price zone, because there was a lot of liquidity in this price zone that got left behind back in the day, and a lot of folks that are in profit and trying to risk off right now to lock in whatever profit they have left. So once the shakeout happens, and we're shaking out right now, I think it's setting up for a good rebound.
True. This is going to give you. And actually, we talk about this a little bit later, so I guess I'm not going to skip ahead. But there are some, as Tom Crown said, I think some generational opportunities coming up. So I think we hit this one pretty hard. If you have any questions about Celsius, about any similar projects, products, services, drop them into Reddit, drop them into Discord. We can talk about them at the end. The next topic was less of a topic and more of Solana renamed themselves Solano. And they renamed themselves Solano because Jack Dorsey, the former founder of Twitter, insulted them, I guess, and typoed. So, anyways, good job, Solano. Oh, so yeah. So I want to talk about the top post in Reddit this week. This is by You Party MSI, and I think every week we're going to just hit whatever the top post is. We will talk about. So please don't make it crap. Make a good post. This was, the header, the title was, everyone said they would love to buy their crypto 80% or more down. Now that it happened, they're paralyzed out of fear. I got 2.2 million views. That's a lot. And I love the first comment from Spooky Poots, which was, I'm not paralyzed, I'm just broke. And I feel you on that one. So, what are your guys' thoughts? This is going into what we were just talking about, but I honestly think this is the range where you start to think about really a strategy for reaccumulating things, not just crypto, right? But stocks, anything. Not to say that we're at the floor. You very well may not be, but is this the time for dollar cost average to really shine?
I mean, I think
way
it's
better
been
than
the
it was.
time. Yeah, it's better than it was, and we've been saying it's a good time to DCA in, right? And to be fair, like, yes, we're touching some levels we haven't seen in quite some time. But we're not that far off from previous levels where we thought it was a good entry to DCA into, right? So if anything, look, where we are right now is, let's say, you know, something like 15-20% off of previous levels where DCA was not a bad idea. So that just makes now an even better, you know, entry point for your DCA. But let's not forget, right? Historically, you know, if you look at the price chart on BTC, you don't really see retracement below previous cycle all-time highs. And we're getting right there. And the good thing is we crashed down pretty quickly, but we're defending the current price point pretty good right now. And even if we do dip a little bit lower, I mean, we're talking about, you know, somewhere in the neighborhood between 19 and 20, maybe 19 and 21, as far as like previous all-time high ranges. And hey, you know, we're about to get a full moon, so maybe things turn around. All that to say, yeah, I'm DCAing, that's for sure.
Yeah, you know what, I am too. I know some people disagree, and that's okay. You gotta trade, you gotta invest to your risk tolerance level. You know, I'm farming enough day job, you know, fiat that I'll be okay. I'll survive. I can put a little bit aside, you know, each paycheck, pick up a little bit more, and I feel okay about that. But if you're, you know, your particular strategy or your personal life conditions, you know, you can't afford that, then do what you can safely do. I think the scariest thing I see is that someone gets really excited, like the prices are down, I'm going to go all in 100%. They just drop it all in there. And, you know, please don't do that. Or even in these conditions, I saw someone the other day mention that they were going to sell a car and put all that into crypto. This isn't, no, let's, you know, be careful.
Right.
What's that, Tom?
Never the right answer.
Yeah.
Never the right. Yeah, right. What we're talking about right now is not a go long situation, right? We're talking about DCA, and DCA is price agnostic. So if it was a good time to DCA at 28, it's an even better time to DCA at 23. But yeah, by no means am I, at least personally, saying it's a good time to go long. And I think it's just a good reminder again is we're talking about DCA here. We're talking about a no emotion investment strategy. If any of you are feeling FOMO, if any of you are feeling like, hey, I think we're going to turn around, I think this is the bottom, you know, Mr. said we're not going below all-time highs, let me go open a long, that would probably be the wrong move, right? Let's make sure that we're not trading emotionally. Let's make sure it's just something that is disposable in terms of your investment amount, but also that you have stuck to a DCA strategy or are about to initiate a DCA strategy. That would be the only thing I would be doing right now. I think going on any kind of leverage right now would be extremely risky. That said, no risk, no reward, right? So good luck, happy hunting if you do.
YOLO.
YOLO.
I'm one of those YOLO guys. I did open a little bit of a long here. It's fun money. If it goes to nothing, I'll be okay.
There you go.
Yeah. But don't tell the wife I call it fun money. She'll kill me.
It goes back to the time I was saying, the time to buy is when there's blood in the streets, and there's plenty of blood.
Just a little. So I think good post by Party MSI. Now, I do want to note a few posts down in the top post for the week on Reddit was from, I can't even say it. Dude, I don't know what your name is. It's like Frister Nerder Developer. Okay. But he said not to buy now or risk catching knives. And that's the other part of what we're talking about, which is catching knives is exactly what you would be doing if you went, 100% in right now. So,
and maybe you might catch it, right? That's always the hope. But I mean, do you want to trade on that? Maybe if it's disposable and you're literally down to gamble, go for it. But if it's money you need, highly caution against anything like that.
Yeah, go to the casino. Your odds are probably better. Let's talk about Optimism. So we talked about Optimism a little bit last week. They had the airdrop, which if you didn't get, I believe you can still claim it. It's not going to be worth as much. But, I think it's just interesting how many of these little issues we have. This is, it shows you how early and how sometimes not user friendly a space is. So when the Optimism had been coordinating with a market maker to, at launch, and they had to deliver 20 million Optimism tokens, but they sent it to the wrong address. Okay, fine. They said that they could claim it. It would take a little bit of time. They can get to the tokens. The problem was some sort of hacker noticed this and was able to grab those 20 million tokens before the market maker could. Now the good news, if you're big on Optimism, he did return 17 million. He gave 1 million to Vitalik and he kept 2 million for himself. We'll call it a finder's fee. Why? Here's my question. Why do so many hackers love to dump tokens into Vitalik's wallet?
Memes.
Is it just like a respect thing?
You got to pour one out, right? You got to pay your respects for sure.
Yeah, I think it is respect, though. Like, I think they respect Vitalik, and it's almost like I give these to him because I trust, like, he'll do whatever is the right thing, or I don't know, something like that. It's like respect based.
Yeah. Was it the SHIB or something that one time? Oh, they burned a bunch and then they donated a ton. It's like billions to him, or at least billions worth of
the supply.
Yeah. But that's not the first time.
These hackers, right, wouldn't be able. The language that they, Solidity that they're using to, execute these exploits wouldn't have even been possible without Vitalik. So on some level, like if I was one of these white hat guys, I'd be throwing Vitalik a mil or two tokens every time I hack a protocol, right?
Can you be a white hat if you're taking the coins and keeping some? I don't know if you can be white hat.
That's the funny thing.
Returned them.
not all of them.
Still gained though.
No,
yeah,
that's
not all of them.
But shouldn't he get a bounty anyway? So
I agree.
Maybe he's like an off-white hacker. Maybe he's like
Gray
a
hacker.
Gray hacker. Yeah.
Mm-hmm.
This is the funny thing about DeFi, though, is in having been in that adventure where I lost basically my whole port on the hack. Right, I talked about this before, but you can reach out to these guys and you can offer them the world, and either they want to play ball and they want to do the kind of right thing and say, okay, yeah, maybe I should give it back, and they usually get a pretty hefty fee, which often is in the hundreds of thousands or even millions, because otherwise you're going to lose it all. These protocols don't have much recourse. Police really don't have much recourse, right? There's not much you can do. Like the hacker that I lost my funds to, that the protocol did, he's doxxed. He's been charged in the court of law, and he just said, F you guys, I'm going to go on the run. And that's it. Now, maybe there was a certain price point at which they could have lured him to, give at least some of it back. And I think that's the challenge these guys have, is they don't really have a lot of options. It is a lot, though.
And it brings back that kind of almost, is it a meme? Is it a cliche? Or maybe we're talking about the same thing at this point. But I mean, if it was accessible through the smart contract, was that a feature or was that a bug?
Yeah.
Right? Did he
It's even
exploit
hard
it,
to
or
say, did they do something wrong? Because
exactly.
It's not like they held them up by gunpoint or by threat. It's like they functioned with the set out contracts.
Right.
Yeah. Yeah. Then you're getting into whole different area. I know the court cases related to that have talked about, it really depends on the nature of the hack, and what they did to gain those funds.
It's fair.
But I think at the end of the day, it's going to come down to regulation. The more this kind of stuff happens, good, whether it's a white hat, a black hat, or something in between. But the more this happens, the more that regulation is going to, become heavier handed when it comes to the space. Same with stuff like Luna. And
realistically, we can all agree it's bad.
Mm-hmm.
It's not a surprise, but yeah, is it? I don't know. Like, I think the nature of it's important, but if these people don't exploit it, it's just a matter of time till someone else does. So it's a tricky situation.
Yeah, and I find it amusing in some of these cases. It's often someone else that finds the vulnerability or finds the whatever, right? Finds that opening. They post something, say to Twitter or Reddit, and then someone else a hacker says, "Oh, you know what? That looks like a good target. Let me get on that." If you find something like that, maybe take it into DMs before you post about it on Twitter.
There you go.
So-
I mean, but there are plenty of stories where the DMs really do nothing and then they escalate to
True.
an open forum like Twitter and then they get some attention. So there's something to be said for that, but it's always so tough. I mean, we're having philosophical conversations at this point of what defines a black hat versus a white
Mhm.
hat. He gave it back. Is it a funk? Is it a feature? Is it a bug? I think it, just kind of all it boils down to, and I'm sure I sound like a broken record at this point, but we're so early, right? We're figuring this stuff out, right? And sometimes you need to have philosophical discussions to really understand how you should move forward. Maybe this isn't the right forum to do that in, but I know for a fact that there are protocols that are having internal discussions to this exact point of like crisis management and what you do in an exploit scenario. But as long as those conversations are happening, I'm bullish, right? If those conversations weren't happening and people were just, putting their heads into the sand and just trying to ignore it till it goes away, that would be a huge problem. But as long as we try to learn, as long as we try to, grow and build from, past mistakes, that's how you build an industry. That's how you build a new system.
I agree. We grow and learn each cycle. So, you guys are lucky, and ladies, everyone is very lucky to be on this podcast live recording with a lunar analyst, Mr. Tom Crown.
Oh man.
Yeah,
my.
Tom, what's the significance of this lunar cycle here we're about to hit tomorrow?
It's either the lunar cycle or Litecoin. I'm not sure which one I've gotten the most crap for over the years. They're definitely they're neck and neck. So I'm a math guy. I don't believe in, I don't know, astrology or any kind of significance. I don't know. Yeah, numerology. You know what I mean? Those kind of fields of belief. I don't judge people who do, but that's not my thing. And with every fiber of my being, I would prefer for this not to be true. But if you look back at the Bitcoin, if you look back at the chart on Bitcoin and there's a thing called moon phases actually on TradingView, where it just tells you when it's a full moon, when it's a new moon. And you can do that yourself by just every 28 days is a moon cycle. If you do that and you look back, you'll find, and I made a video about it. I did the research myself. I didn't read anyone else's. I just did my own by looking at the chart. There's a correlation that you can't deny. It certainly isn't. So basically the correlation is full moons tend to be around the swing lows and new moons tend to be around swing highs. That's kind of vague as astrology is, but the correlation is more than random. It's definitely not 100%, but it's there. And so here we are at a swing low and it's a full moon today. Not really surprising, according to the moon experts, but, yeah, what it would imply is, maybe we're close to what could be a local bottom or macro bottom. You only ever know in hindsight. And we typically do see price have some upward price action into the new moon. I hate that this is true. I feel crazy saying it.
Oh, crazy. But I distinctly remember last year there was maybe it was like an 8-month period or something. We had checked that if you had traded the moon cycle, I think you would have been like 80% accurate just swinging that, yep. Which is
it's wild,
far more accurate than probably everyone listening to this. Keep that in mind. And one of the grandfathers of astrology, I always love putting this out there. People don't realize it. So you've probably seen his tools. If you've ever used TradingView, which is probably, I guess, the most popular chart tool that you can use on the internet, tradingview.com. Some of the tools on there, you'll see Gann mentioned, like a Gann fan. W.D. Gann was a very famous technical analyst from like 100 years ago. And what a lot of people don't know is he was also really big into financial astrology. And we're not talking just the moon. We're talking, measuring like the positions of all the planets relative to each other and different times of the year and seasons, and a lot of stuff I absolutely do not understand. There's a lot of math involved, but
there's actually a lot. There is studies. It's weird. I guess we can say everything's cyclical, right? Like everything in the world, everything in the universe, it's all cyclical, has some kind of rhythm. And yeah, I know that I read studies on, I think it's Mercury in retrograde in the stock market. This was published by like a real person, not a meme. And it was the stocks. If you look back at the stock market, it's like something, I might have this backwards because I don't remember, but it's like when it's in retrograde, it's like the stocks did 1,200% over the last like 10 years or something during that time. And then when it's not, it was like 70%. Like it was statistically very different. I don't know.
Mm-hmm.
I think there's people out there trading it.
There are there are professionals out there that trade this, and I know we're going to get crap for. I can see it already. We're going to get crap in the comments for this, and I'm not saying I do it. I'm not saying it works. I'm just saying there is a trend, a measurable trend that you can see that it's been effective at certain periods in time. I do remember, and I got to find the link again. I'll share it with you guys. I'll post it into Reddit when I find it. But there was a guy who had a year out. I remember he had called the May 2021 crash. He had called that a year ahead of time using financial astrology. I found the link and I was shocked. Like I had to triple check it, but his chart was posted to TradingView a year ahead of time, and he nailed it to the week. I was like, okay, maybe there's some secret formula that works here.
All right, never mind. 100x long. Here I come.
Yeah.
Okay.
Well, it's important that it works. Is just that it's statistically, we can look and see the data is better than a pure guess. I think that's safe to say.
It could line up with other things. Maybe it lines up with like CME futures, something or other. I mean, there could be other reasons. There's a correlation, but not necessarily causation.
I don't want to give away spoilers from the video, but the biggest argument I had was the moon cycle is 28 days. Bitcoin's difficulty adjustment is every 14 days on average. And so 2 difficulty adjustments is 28 days. Maybe that's something to do with it. I think that's more likely than simply the moon. You know what I mean?
Yeah, but the moon sounds cooler.
I know. I make good videos. No one believes me. No, I'm just kidding.
He does. That actually is a pretty fun video. So let's talk a little bit about NFTs because, we talk a lot about coins and tokens and normal crypto stuff, but there's a lot going on in NFTs and they've been taking a hit too. First, congratulations to Seth Green. He's reunited with his Bored Ape. If you remember, we talked about Seth Green, actor, comedian. He has a bunch of shows. He had built a whole new show around his Bored Ape, and then the Bored Ape was stolen. And of course, like any good crypto guy, he's not going to use an ape he doesn't own the IP to, the intellectual property. So his was stolen. Someone else bought it. Basically ended up he had to pay that guy $300,000 to get his own ape back. So good thing Seth Green probably has that kind of money. Still kind of a burner, but, good for him. So we will get to see that show. Also, Bored Apes, unless something changed since I last wrote this, they lost their 6-figure floor. This is kind of a milestone, right? And of course, all NFTs are taking a hit, but there's a lot of opportunities to be had. So I looked at the top 10 projects and then looked at the trading volume in this range. In the top 3 right now, this is what people are interested in. Just looking at the number of trades, not the cash value. Number 1's Other Side, which is the Bored Ape metaverse. It's 100K project, so I'm actually impressed it's even held. It was at like 1.7 ETH right before this. I'm thinking of picking one up, right? I don't know. Oz, you're probably the only other guy that cares about metaverse here. Are you thinking of getting any? If they drop a little bit more, maybe.
I bought it the day after the mint. Yeah.
Oh man, I'm sorry.
No, I'm happy about it. In it for the long term. I'm planning on building on it.
Everything's for the long term now, right?
Of course, in it for the tech.
Yeah, in it for the tech. Honestly, I am, but also I want to make money. So yeah, so Other Side, number one volume in terms of the number of NFTs being traded right now. Number 2 is Goblin Town, which we've talked about a few times. Not surprising at all because we are in Goblin Town, and we still don't know who's running Goblin Town. We don't know anything about the people behind the project. They did dispense burgers, I think, last week, and this week there's maybe some eggs that are about to be patched? I have no idea. It's goblins. In this third one,
Very related to goblins, by the way. Eggs and hamburgers. That's the first things that come to my mind.
well, this as the story goes, they're running Mick Goblin Burger, not to be confused with McDonald's. So, yeah, take that as you will.
NFT question, actually, that we're on it. Whatever happened to the ETH rocks? I remember there were rocks, and people like LOL. People are buying rocks for $1 million. Whatever happened to those? I haven't heard of them in a long time.
That's still very expensive,
there was.
I think.
Yeah, I'm sure because no one can buy them at this point. But that's a funny thing, though, is there's a lot of these like little projects out there in the NFT space that were selling for way more than even Bored Apes. Yeah, so ETH rocks right now are at 118 ETH floor.
Ass.
Yeah, they're just pictures of rocks. I don't know what to tell you. There's NFT projects that I really dig because of the artwork. There's NFT projects I dig because of the community or the fun or the utility. And then there's rocks. I don't know. Maybe it's some people are like NFT historians and they invest in like significant projects. Maybe that's one. I doubt it though. If I make it, Tom, if I make it someday, I'll buy you an ETH rock.
Oh,
I'll gift it to you.
I've always wanted one to hold down my my digital papers.
Yeah. Well, I mean, it's a flex, right? You own a 6-figure digital picture of a rock.
You're very wise. I should emulate you.
The number 3 out of the top 10, the number 3 most traded NFT project. This one sounds really dumb. I'm not going to lie. And it's another derivative Goblin Town kind of pseudo derivative attempt, but it's called, and apologies for the language, Shit Beast. That's what it's called. And I posted a picture for you guys. I think the floor was like half an ETH, which I know isn't as much right now, but would you pay half an ETH for that?
Probably not.
You know my
It's
answer.
interesting.
I like the answers. Yeah. If I can't sell it to Oz, then you guys are hopeless.
Who's gonna buy it? If not for me.
A lot
For
of
these
people.
reasons, I'm out.
Yeah, to the Pixelmon team.
Yeah, thanks for bringing that up. And no, I don't have any updates on Pixelmon. I don't know. I did see some new artwork. We will be covering Pixelmon in future podcasts.
Trying to get that guy on. He's hard to track down.
I don't know if the original guy's still with them. I think he might have stepped down or something. I mean, he was like a teenager, so I'm not sure how interested he was. He got his payday. Is a final 2 comments, and then we'll move to the Q&A. First is Terra. I know we talked a lot about Terra in the past few episodes, but it's safe to say Terra 2.0 didn't do too well. Oz, you were the biggest, you were like the Terra Luna whale here for about a week. How's that paid off for you?
To be honest, I actually profited, but I don't actually hold any Luna anymore. I was very disappointed with the Luna Classic payoff, so
Good.
I had to dump. I abandoned the ship.
Yeah, you weren't the only one. So this was the fun part. Some exchanges like mine, like Bybit, had paused trading on Luna at a certain point, dropped the price by like 3 decimals, and then turned trading back on. So that was fun. Yeah, I didn't make anything. I didn't have much in there, but I was still disappointed by how that was handled. Yeah, so just know that the FBI and the Korean police and SEC and Lord knows who else are all investigating them. I would be careful about touching that anymore. I mean, if you've been wrecked by them, you may not have a choice, but yeah, be careful. But there are some unsubstantiated rumors that Do Kwon cashed out a few billion over the past few months. Again, I want to emphasize unsubstantiated. We are not the police. We're not, investigators. We can't confirm this, but if that's the case, he is in a world of hurt pretty soon, I bet. And that might explain a few things about the instability or the weakness of Luna.
right? Where all the funds went, right? And I think it's going to be really just a matter of time before it all gets uncovered, because I would imagine that whatever the FBI or the Korean equivalent discover, right, that kind of stuff is going to get made public at some point. So at some point, we'll see if that man Terra is actually has accurate information. He claims to have sources within TFL. He claims to have all these different sources. I'm just hoping that we get to find out kind of what happened and really just understand if these rumors are true or not. But for me, hey, I'd love for somebody to open up a betting market on whether or not Doe goes to jail. What's the over under? Where's the line on him spending some time behind bars? It's looking very likely at this point.
Well, what do you guys? Let's do an internal vote. Let's see. What do you guys think?
You Rich go to jail.
Yeah.
Not
Um,
Right?
rich enough
Okay. Well,
not to go to jail.
Not anymore, but it used to be.
Yeah, not
sweeten the pot
anymore.
then. Let's put a shit beast on the line. Okay, if he goes to jail, you guys buy me a shit beast. If he doesn't go to jail, I'll buy you guys a shit beast.
Whoa,
How
whoa,
about
whoa! A
Okay.
whole shit
Ew.
beast?
a whole
Are you sure you want to
shit
enter that?
beast?
Jeez.
That's risky.
Yeah, I don't know how
Yeah,
I got that kind of shit beast laying around. What are you talking about?
If shit beast goes to 100 ETH, at the end of the year, you're going to be in trouble, man. You're
I
not.
just
You don't
wanted to
have
say
that kind of
shit
money.
beast,
I know it.
But I think like I'm now on the line for this, so I can't back down. It's on.
Okay. And you've heard it here, everyone. This isn't like Do Kwon's 10 mil bet that Luna would never drop to a certain price that he lost horribly. This is the shit beast bet. So it's on.
It's on.
Are we all going to rug before?
If
I
it
don't know
doesn't
what we're
rug
rugging, but
before.
we're all rugging before
We're rugging something.
whatever project we're on. Yep.
Yeah. All right. The last thing, then we'll move into the Q&A. And this one, actually, I was really excited about as the resident art school dropout, among other things. I did do more productive things in my life since that event 20 years ago. There's a Web3 gallery, a art gallery, NFT gallery in New York City, not just in New York City, but on Fifth Avenue. And for those who are not from the US or have not been to New York, Fifth Avenue is basically like the primo shopping district where all the really high-end stores, jewelry, fashion, that's where the people with money go to buy stuff. So the fact that the gallery is there, okay, cool. But the gallery, what I think's neat about it is you had to buy a token to be able to present in the gallery, and then you have your your little digital screen, and you remotely display your artwork, and you can sell your artwork that way. There are attendants on site that can help people. There's also QR codes under that, or near the art that you can scan if you're like, hey, I want to buy this. Let me scan the QR code and go to a link where you can do that. I thought that was really cool because this is as subtle as it is, right? That's kind of what we want to see, that convergence of, traditional markets and services with what crypto and DeFi and Web3 and NFTs are bringing into play. I mean, what do you guys think? Is that kind of cool, or am I just being ridiculous?
I mean, looking at the art, it does look pretty neat, and it's more focused on traditional art, I think, at least from looking at it, which is kind of nice to see as well.
I think what you're saying is the art doesn't look just like a monkey picture, right? It looks like really talented artists with really, like high level of skill.
Looks like an actual art gallery.
Yeah. This stuff looks amazing. And they have different price brackets, I guess, which depends. If you have a lot of money, you can buy the better positions in the gallery, the token for that. But it's a brilliant little idea. So if you're in New York, you're on the subreddit. If you're in New York and you want to go visit it and give us your perspective, let us know. Pictures, come up and talk about it. I don't know. I'd love to hear more about it. Or maybe I'll go up myself. I'll go up myself.